Brady, I'm going to turn it over to you, sir, so we can learn a little bit more about kind of how land values have been impacted during this pandemic.
Hey, great. Thanks, Kayla. Appreciate the opportunity to be with you here this morning and some good information that you're sharing. That's for sure. We're in different times, and so, they're trying to understand exactly how people are thinking and what's going on in the market becomes a little more difficult. But I think we've got some evidence here based on what we're seeing. We're going to talk about what the land market has been doing during the pandemic. But first, I'd like to talk a little about the months leading up to the pandemic and what was going on in the land market. And when you talk about the fall through the winter, we had auctions as far west as Colorado and Kansas, up north into North Dakota, as far east as Ohio, south into the Delta there in Arkansas, southwest in Oklahoma. So a pretty good sample across the country, and seeing some different results. And in general, and I'm going to talk about some generalizations today, Kayla, and that's always a little dangerous because every pocket is different, every property is a difference. But to really kind of summarize what we're seeing, I think we've got to talk about some generalities. And in general, we've been seeing an upward trend in values as we went through the fall and winter. It was very location dependent, but we've even seen some examples of the strongest competition that we've experienced in the last 5 years. And I think the basis for what we were seeing, some of the variables impacting land values included tight land supplies. We'll look at that a little closer. Favorable interest rates. We'll look at what's going on with interest rates. We'll take a look at incomes and also 1031 exchange money. We'll start here with a chart that the good folks at Iowa State put together. They came out with this at year end. I think their data period is basically from November 1st to November 1st. And you can see, so this is based on year in November 1st, 2019. You can see the blue line reflects nominal values, red line inflation adjusted. So the nominal values are what we're used to talking about. And you can see there as you go up into the 70s, the run up in farmland values, we get to 80, the bubble bursts, and we tumble down to the mid 80s to where as you go forward from the mid 80s, we've experienced just an incredible period of appreciation. And maybe in Iowa, as much as any state, we get to the pinnacle there around 2013. We have some fall off, and Iowa might have experienced as much fall off as any state due to the incredible appreciation they experienced. And also that first year coming off the pinnacle, they had some weather struggles there in Iowa. And then you can see over the last couple of years, we've seen some evidence of a little more strength in the land market, including the period ending there November 1st, 2019, taking us into the winter months. Now, who's buying the farmland? Again, this is data put together by Iowa State University. You can see back around 2004, 2005, nearly 40% of the land in Iowa was being bought by investors, about 55% by existing operators. As you go forward there, including the period where we experienced a lot of appreciation, you can see that it was the operators that were driving the market, getting to the point where they were buying nearly 80% of the land. The investors fell down below 20%, but as incomes came down the last few years, you can see the investors saw additional opportunity to buy, started to buy a little higher percentage. But again, the last couple of years, the operators have been pretty strong and have started buying a higher percentage of the land there in Iowa. I said we'd look at some examples here of some auctions. This was an auction November 25th, okay, and this was an area that had good yields in 2019, not record-breaking yields, but good solid yields. And this is an auction. You can see tracks 3 and 10 and 4. Those were tracks that were either pasture or older sets of farm buildings. The rest of those tracks were all tillable tracks, and you can see the price ranges on those tillable tracks from 8,000 to 9,000 an acre. And I don't want to dwell on prices per acre because there's some folks watching in some parts of the country that might sound cheap. There's folks in other parts of the country that might sound high, but for this particular pocket, it was very strong. The sellers at this auction would have been thrilled at $5 million. We ended up little over $6.3 million. You can see 71 registered bidders, a lot of competition in the room. We had 5 different buyers with tax deferred exchange money that were highly motivated to get that money invested. And so just a lot of competition. And quite frankly, I think this auction was probably the strongest competition that we had seen in the last 5 years, just as far as a competitive environment. A lot of folks bidding that started out, I would have bet on them buying, but ultimately they didn't get anything bought. But it sure felt like back in the heyday of 2012, 2013, when we just had a lot of competition. But again, a lot of registered bidders, a lot of people getting in there and competing. We go forward here to February 12th. This was an auction again in a pretty strong area. These soils were good, solid soils, not the best soils. This farm did not have any extensive drainage tile to the farm, but you can see here tracks 4 and 5 were older farm buildings. The balance of the land was tillable, little woods on it, but very strong price for this acre at $10,745 an acre. And again, 43 registered bidders, a lot of competition in the room. Ultimately, it was an investor that bought the tillable land, but it was operators that pushed him to the point with several operators bidding on different tracks right at his heels. I'm going to show one more auction here as an example, and this auction was primarily timberland, but I want to show this just to kind of get across the idea of folks wanting to invest their money in land. Again, this was predominantly timber, but it had been timbered pretty hard. There wasn't a lot of timber value there currently. This property did not include the coal rights or mineral rights. As a matter of fact, it had some pretty extensive deed language that restricted what you could do with the property. You couldn't count on being reimbursed if you ever put any improvements on the property. And so it was just a property by nature that had some challenges. As a matter of fact, we could only find one bank that was willing to take this property as collateral in its loans. So a property that was somewhat limited, but you can see almost 200 registered bidders at this auction. And again, another auction where there was just a lot of competition, a lot of folks going back and forth trying to get their money invested. And I think it reflects this idea of a lot of folks out there wanting to put their money in land. We'll bounce back here one slide. We talked a little bit earlier about the limited supply of land on the market. And I think that's a very important variable, what we saw going on through the winter months. This chart's a little tough to decipher, again, from Iowa State University, but you can see there around 2012, 2013, the blue line, which indicates the folks that believe there was more land on the market. The orange line indicates the folks that believe there was less land on the market than the year prior. And the gray line reflects the folks that believe there was the same amount of land as in the year prior. You can see there around 2012, 2013, they all intersect, about a third, a third, a third. But as you go forward from there, the orange line begins to dominate, and year after year, folks believe there's less and less land on the market. And it's not just being compared back to where those lines were intersecting. This is compared to the prior year. So again, year after year, less land on the market. We get to 2019, you can see those folks in the gray thinking there's about the same amount of land on the market at about 50%. Orange and blue, they're less and more. They're both getting down there around 25%. So it looks like after several years of less and less land on the market, we might finally be getting to the point where there might be a little more land on the market than the preceding year. But we're going to talk a little about what we've seen during the COVID-19 period. Take a look here at interest rates, and interest rates just become absolutely critical to the land market. You don't want to underestimate the impact of these interest rates on the land market for a couple of reasons. Number one, the obvious is it impacts the cost of borrowing money to buy land. But secondly, maybe more importantly, is the idea of when interest rates get high, there get to be a lot of alternative vehicles out there for people to invest their money in and get pretty high returns. When interest rates get pushed down low, the number of alternative vehicles for folks to invest their money in and get good returns tends to be more limited. So when these interest rates get low, a 3 or 4% return on farmland may sound a lot more attractive to someone than when there's vehicles out there creating a lot of different investment opportunities. So you can see going into 2016, nearly a zero federal funds rate, and that was to get us pulled out of the financial meltdown. As you go forward through 2016, 17, 18, the economy was heating up. Interest rates were going up. There was a little concern whether inflation was going to kick in. We get up there to about 2019, and the Open Market Committee begins debating whether raising these interest rates is really good for the economy. The concern with the inverted yield curve becomes a hot topic, and so interest rates start leveling out. We get into 2019, and they start pushing the federal funds rate even lower. And this winter, I think we benefited from that and what we were seeing in the farmland market. And then, of course, here recently during the COVID-19 period, the federal funds rate was pushed all the way back down to near zero, which is a big deal, I believe, for the farmland market. I believe the 10-year note, if I understand correctly, fell below 1% for the first time in the history of the U.S. So some awfully beneficial interest rates that the farmland market is benefiting from. We take a look at incomes here, and this is based on USDA data, what's been going on with incomes. You can see 2012, 2013 was kind of the perfect world for farmland values. We were coming off of $8 corn, $18 beans, and nearly 0% interest rates, and awfully strong incomes. As we went forward, income started to tail off, and a lot of what I was seeing in the media, they were talking about 6 years of declining incomes, and incomes nearly half of what they were back in 2013. And that's all true, but I think you've got to put some perspective on that when you're comparing that to nearly a perfect world. And I'm not sure too many people really expected that perfect world to continue on forever. And as you can see on this chart, in 2019, net cash farm incomes and net farm incomes were actually above the 18-year average. So really pretty decent incomes in 2019. Of course, that includes some market facilitation payments there. And this is the industry on average. You've got operators all over the board, some making more, some making less. But as an industry, pretty good incomes in 2019. This is a slide on Indiana land values. This is provided by our good friend Todd Keithy there at the Schrader Chair in Farmland Economics at Purdue. And the gold line reflects what's happening with transitional values or development values. That black line reflects top land in Indiana. The couple of dashed lines reflect average and poor respectively. You can see they're coming off the financial meltdown 2010, 2011. There really wasn't much difference between development land values and top farmland values, and there wasn't a lot of 1031 exchange money out there. As you go forward into 2019, you can see how much stronger those development land values or transitional land values are than the top farmland values. And I believe that's a reflection of how much 1031 exchange money is out there. Those folks are motivated, protect their capital gains. They want to get it reinvested, so they're not paying taxes on those capital gains. So when they come to an auction, they are very motivated to get something bought, sometimes willing to pay a premium to avoid paying the tax on their capital gains. So that has helped our market, as you see through this last period. Let's take a look at some examples of actual sales during the coronavirus period. And as we get through this period, we're drawing closer and into planting season, and the nature of that period, sales are not as many. So the examples we've provided here are all examples of high percentage of tillable land. This March 19th auction, 16 tracts in Vermilion County, Illinois. 35 registered bidders. So this auction occurred, we could have 50 people in the room. So we were limiting the number of people in the room. COVID-19, kind of the scare of COVID-19 was just getting out there. And we believe that we saw some indication that some of the smaller local farmers, some of the neighboring farmers that expressed some good interest at the beginning of this marketing period ultimately backed off and did not participate, and we would guess there was some COVID-19 influence there. But at the same time, the larger operators stayed strong, investors stayed strong, including investment funds. Late in 2019, we told these sellers they could likely expect to be around 6 million on the sale of this property. We ended up just a little over 6 million here on this property. March 23rd, so over the weekend there preceding March 23rd, President Trump and some of the leading national health advisors came out with some of their recommendations as it related to the COVID-19. The shelter in places started coming into effect. So we translated here our auctions to simulcast, phone bidding, and online auctions. We operated from our office here, took care of bidders either on the phone or online. This two-tract auction in Dane County, Wisconsin, we had 22 registered bidders, a lot of activity, a lot of competition at this auction. Ultimately ended up about $9,600 an acre. It did include a smaller, older farmhouse, but at the very upper end of expectations here on what this farm brought. April 14th, a couple tracts are in Madison County, Ohio. 16 registered bidders here. Again, a very, very strong auction in the midst of the COVID-19 period. We had a lot of activity, ended up over $8,800 an acre at this auction. Again, at the very upper end of expectations on what this property sold for. April 20th, we had 4 tracts in Allen County, 23 registered bidders. Now, this property was in an area that was heavily influenced by Amish. It ended up bringing just short of $27,000 an acre. And again, the Amish influence is what drives the values that high. But ultimately, it was an Englishman that was the high bidder here at the auction, and that $27,000 an acre, just a little short of $27,000 an acre, I would say was a record for that pocket. A lot of activity, a lot of folks trying to buy farmland. April 30th, we had 9 tracts in Fayette County, Ohio, there near Washington Courthouse, at 38 registered bidders at this auction. It was a very diverse property. We had some really high quality soils that ended up at $10,000 an acre, had some lower quality soils, bottom ground, that ended up a little short of $5,000 an acre, but a lot of activity, a lot of competition. Even on those poorer soils, we have multiple folks in there competing, trying to buy land. Even here in the last couple of days, we had auctions both Wednesday and Thursday of this week. A lot of competition and values at the upper end of the expectations. That April 30th sale, I think we were just short of 4 million, and at the upper end of expectations there. So throughout this COVID period on these tillable land tracts, we have had a lot of competition, a lot of bidders looking to invest cash. When we take a look at the equipment market during the coronavirus period, again, as we get into planting season here, not as much sales volume, but the sales that we have had have been very strong, including an equipment sale that we were better part of 30% above expectations. We had one added equipment auction. That's a consignment type auction that we've had for 13 years. The sale we had this year was the strongest we've had in that sales 13-year history. As a matter of fact, there were 3 different tractors there that Machine Repeat cited as records or near records. So very, very strong. I talked with our friends the Stephases there in North Dakota this week. They sell a lot of equipment, farm equipment there in the northern states, northern corn belt, and they report a red hot equipment market up there. And there were pockets up there that really struggled in harvest this year as snowfall, early snowfall, kept corn in the fields right up to recent periods. And so even where they struggled with harvest, very, very strong equipment market. They reiterate it's a little tough to pinpoint exactly why it is so strong where they're at, but they're seeing, like us, very strong equipment sales. We've got a couple of equipment sales next week that we've had tremendous interest in. So very, very strong on the equipment sales through the COVID-19 period here. Reports from other areas during the coronavirus period, including the Delta, the Western Corn Belt, northern states. So here recently, I talked a lot with our associates, partners, other folks in the land market industry about what they've seen through COVID-19. They reiterated coming into COVID-19 through the winter months, strength on quality land. They also talked about pockets that show evidence of marginal land being weaker. And last year's weather patterns sure make a difference. Again, every pocket is different, every property is different, and last year's weather can make a difference on what a particular pocket is looking like. But they reiterated, even though a lot of these folks may not be in the auction industry as far as the land market, what samples they've seen during the coronavirus seem to be very consistent with the strength that they saw through the winter months. So a lot of land being put, or a lot of cash being put in the land market. Some takeaways here from the coronavirus period. Of course, we've got concerns over future incomes with the commodity prices being lower. This COVID-19 has really impacted the flow of food throughout the United States, the distribution, and that's impacted our ag commodity prices. You know, I think there's still a little skepticism out there relative to China performing on phase one. And I think that until there's more evidence, there'll still be some downward pressure on the commodity prices. And of course, what's going on in the oil market has really impacted what's going on in the ethanol and corn market. So, you know, on those three fronts, we've got some real downward pressure on commodity prices. If we don't see more positive news in those three fronts, sooner or later, those are going to become a drag on the land market. So for 12 months from now, if we don't have a rebound in those areas, I believe we're going to see the impact in the land market. If we get good, strong rebounds in those areas, then it could have the opposite effect. We talked about the importance of 1031 exchange money because of the impact of COVID-19 on businesses. You know, I think the sale of land for development purposes is surely going to slow down as we go forward, and might as well as far as residential development. So I think it's very, very likely we're going to see significant less 1031 exchange money in the market as we go forward. But as we've talked about, interest and demand have remained relatively strong through this COVID-19 period. I would even say very strong through the COVID-19 period. Yeah, even more limited supply of land. We talked about the importance of supply of land. I think, you know, part of that is seasonal as we've got into planting season here, but also with everything going on in the marketplace, even though these land markets have stayed strong, I think there's a lot of sellers that are a little less definitive about what to do just because of what's going on around them in the world. Interest rates, we talked about the importance of interest rates. And of course, the fact that they've been driven even lower through this COVID-19 period, which I think has been a big boost for the land market. These last couple variables I'm going to talk about, I think, are very, very important to a lot of buyers. The first one there, the diversification. Historically, land has been a hedge against the broader market drawing down. We'll take a look at a slide there that relates to the diversification. I think buyers are also looking at the relatively low volatility of land when they see everything else that's going on around them. I think it's really emphasized during this type of period. And I think here it's prudent to look at the gold market and see what's going on there. Often farmland and gold are compared, both considered as safe investments. And I'm not here to try and tell anybody that gold's a safe investment or farmland is a safe investment, but they are often compared in what is going on because many folks do consider them safe investments. I should have shown in this slide what has gone on with gold throughout 2019. You would see a general run up in the value of gold throughout 2019 as the world has gotten what seems like more geopolitical as we've gone through 2019 into 2020. You can see when the COVID-19 shakeup really began, gold fell off, but as we've gone through the COVID-19 period, gold has really recovered and become stronger and stronger, again, as I believe folks look to invest money in what they consider a safe investment. Last slide I want to look at here just relates farmland as a diversification tool versus equities. And in this slide, we take a look at the total return of row crop farmland versus S&P 500 during equity drawdowns. And you can see kind of the gold or orangish shade there is row crop farmland. The green shade is the S&P 500 equities. You can see Q1 of 2000 through Q3 of 2002. So the dot-com technology bubble period, the S&P 500 was off 44%. During that same time, row crop farmland returns were at 18%. You go forward into Q3 of 2007 through Q1 of 2009, and we talk about the financial meltdown. During that period, the S&P 500 was off 46% versus awfully solid returns in the row crop farmland market at 26%. So while there's times when the S&P 500 really runs ahead, it's times like this when farmland can look very, very attractive. And I think that's exactly what we're seeing, and what a lot of operators and investors alike are seeing, and that's why they're putting money into farmland as we go through this COVID-19 period. So that wraps up my presentation. Kayla, I believe folks out there, if they've got questions, they can type those questions in, and we've got a little time for questions, if I understand correctly.
Yep. So guys, on your bar there here for the webinar, you are able to go ahead and chat in questions right now, and R&D will go ahead and him and I will both go ahead and kind of take some of those questions that you guys may have as well. So we really appreciate guys taking the time this morning to talk with us about some of the changes that have come out since the CARES Act has been released, but also taking a look at how land values have really kind of not been too much impacted, thankfully, from COVID. I'm really glad to hear we've still got a strong interest out there. I know lenders, from a lender perspective, that is also good to hear, especially when trying to look at appraisals and things like that, but as well as equipment values. So great content today. Jen, I'll go ahead and turn it over to you to moderate our questions this morning.
Sure. Our first question is, can you address ranch land values versus farm?
Yeah, as far as grassland, I don't have a lot of data here to show you today. And so, again, the idea of folks wanting to put their money into land, I think benefits grassland alike, but obviously what's going on in the cattle market, some of like what we talked about is going on in the corn and bean market. Sooner or later, if we don't get some rebound there, that will serve a drag down effect on the grassland market.
All right, we've got another one. Do you think lenders will be hesitant to support farmers in the farmland purchases in the next year amidst so much uncertainty?
Well, I'm sure it's going to be on a case by case scenario. A lot of times people want to compare to what happened in the 80s. And I think that in general, the ag industry is so much stronger going into this period than what we were in the 80s. It was so debt driven, what we experienced in the 80s, that it was just, I mean, you could compare it to the 80s, but it's two very, very different times. I believe bankers have been much, much more conservative going into this period. And, I think as we've shown, we could take a look at the financial standings of the ag industry, and in general, it's remained very strong. So I think bankers are still going to be very, very willing to work with operators. But of course, we're talking about in general in the industry, and you've got operators all over the board.
And I'd also, I'd echo with RD, but I'd also add into it, if you are looking to go and apply for funding for purchases or refinances, what lenders are going to be looking for is good data, good financials. So make sure you have updated financial statements, your P&Ls for 2019 if your tax returns have not been done yet for 2019, but also taking a look at cash flow strategy. That's going to be, cash flow is going to be king this year for a lot of lenders to look at and make sure your repayment capacity is there to support the loan request. So take a look at it from a yearly cash flow standpoint, but also take a look at it from a monthly standpoint and make sure that you're recognizing when your income is coming in, but also when some of those expenses are going to be coming out. And take a look at, if we were to potentially have a delay in market or something changes with your income structure, take a look at what that analysis would look like as well so that you can communicate it to your lender and say, hey, we've taken a look at what this looks like today, but we've also taken a look at, if markets were impacted again and we had to delay our income or, expenses were a different month, we've taken a look at that analysis. So kind of take back some of that control and start driving that conversation yourself with some of that data that you have on hand from your financial records as well.
We had two more questions come in, and I'm going to ask them both together because they might lead into each other. One is, are you seeing an upturn in foreclosures? And the second one said, looking for the future, should I sell my farm this fall or wait until 2021 once the virus is over?
Well, I can hit on those here, Kayla, and then you're sure welcome to jump in there. In regards to the selling now versus 2021, we've seen the evidence of how strong this market has remained through this stretch. So we've got confidence where we're at today. When you start talking about 2021 and we start talking about some of the drag on commodity prices that we're seeing, I sure don't have a crystal ball, but there's some risk as you go into 2021. Again, kind of the three variables that we looked at is the impact of COVID-19 on food distribution and how that's impacting ag commodities, kind of waiting for this evidence of does China perform at the volumes of the phase one that they signed up for, and thirdly, what's going on in the oil industry. I think those three things are going to be big variables, and I'm sure not smart enough to predict them, but if they don't turn more positive, I think you probably would have been smarter selling now versus a year from now. If they do turn positive, which I sure hope they do, we could be up some a year from now. So again, you're kind of betting on what you expect here, I think, over the next few months and how that impacts commodity prices. Jen, can you remind me of the first question again, please? I'm sorry.
Yes, they wondered if we're going to see an upturn in foreclosures.
Yeah, again, we could look at the ag industry as a whole, and really it has stayed very, very healthy. And so we have seen a little trickle of land that needed to be sold to satisfy financial conditions, but it has been a very, very small percentage. Again, if these commodity prices remain at these levels, it will create more pressure. But as an industry, you've got a lot of operators that are in awfully strong positions. But if you are highly leveraged, there will be some additional pressure out there without a doubt.
Okay, and that is all the questions that we have.
Awesome. Well, thanks again, everybody, for joining us this morning. We will send out contact information if you have any other additional questions to reach out to RD or myself and our team, and we'd be happy to answer any questions. As I said, we'll give RD and the team information as it comes available from updates for SBA on the EIDL and the PPP program. And stay tuned for news about the CFAP program from the USDA. Hopefully, fingers crossed, we'll hear something pretty soon. So thanks again, guys, and we will see you shortly.